Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Thursday, August 27th. It's the last week of August. September's around the corner. Today's a really big day. Why? Well, let me show you. In about 12 minutes, we've got GDP and we have jobless claims. Let's take one by one, but let's start with global economy. Let me get through the main points of today. Then I'll get into the US data, then I'll get into the sectors, and then I'll get into the stocks. The way I'm doing this video mimics the way I analyze the stock market. I start at global, then I go into the US, then I go into the sectors, then I go into the stocks, then I go into the options. I do it layer by layer. I don't start with the stock and then go into the global economy. That way everything moves from the top to the down. And it's like peeling the onion. I peel the layers till there's nowhere else to go. So again, we have jobless claims, GDP. I'll talk about that in a minute. Let me start with the global data. So investors are looking for Fed. Jerome Powell is speaking today. He's actually speaking in about 55 minutes. I'm going to say something about Jerome Powell. This guy does not know how to play poker. Nobody ever taught him how to keep things close to the vest. He talks and talks about everything he's foreseeing, and he doesn't keep anything close. And that's not really great because the Fed is supposed to keep us on our toes and guessing every step of the way. I mean, do you guys remember some of the older Feds? They didn't do it that way. They kept everything under close guard. It was like they were getting interrogated by the police. Yes, no, very ambiguous answers. This guy he loves to tell what he's thinking. And that's really not what the Fed should be doing. So that's my thing. He's a fairly smart guy. He's responsible, but he just loves to tell people everything that he's thinking, and people take it as what's going to happen. And there's a big disconnect there. But I'll save that for another time and day. So investors are looking ahead for our chairman to speak, and I don't think it's going to have any impact. He's going to talk about whether rates are going to be at the current level, and we already know that Fed is not, because they've told us a million times that they're not going to raise rates for the foreseeable future. He's going to talk about central bank. He's going to talk about and it's being held online this year. So that's the other part of it that's interesting. This year, forecasters expect Powell to talk about inflation and the importance of Congress delivering more economic aid after its last round of stimulus expired. Partisan disagreements have prevented an agreement. And again, I think the market's seeing a huge influx of capital. And if it wasn't seeing this influx of capital, it wouldn't be at new highs. The problem is you can't put a Band-Aid on a gaping wound. That's the big problem. And we don't know how big that wound is going to be for the next 2 quarters. The latest data shows U.S. economic activity has slowed following its initial rebound after the pandemic. And that's expected. The Fed has been primary reason for the stock market to return to record. And central banks, let's give them some credit too. Crude oil has literally been stuck at the $43 level, but that's okay. Because if crude is at $43, that means US producers are not bleeding because they're at least paying less for the oil, for a barrel of oil than what they're selling it for, because the price of crude oil is like $37, between $37 and $41 a barrel. That's the cost they have to pay in the US, believe it or not. So anything above 40 is very positive because at least the company's not bleeding. It's like airlines. Maybe they're not making a lot of money, but it'd be great if they stop bleeding. They're still bleeding. The cruise lines are bleeding hard. But crude oil, at least the bleeding has stopped. The level of supply is through the roof. But right now, I believe that at least we're kind of sitting on the sideline and time is working to our advantage because it's not costing us billions and billions of dollars a month to maintain the business. But I'm sure there's other unmentionable expected expenses, and I'm seeing a lot of washout in the next couple of years in the energy industry. Also, not just because of what happened with the pandemic, but because of energy, because of green energy, especially if Democrats take the White House. There's going to be a huge influx going into green energy, and it's the future. You can't stop it. So, and it's really becoming prevalent right now. So that's the other factor, and it's taking over the world. And I mean, 20, 30 years from now, most of the things that are operating right now in energy are going to be operating, at least residential, non-commercial is going to be operating on batteries. Cars, 20 years from now, you'll be very lucky to find a gas engine. Anyway, let's talk about GDP. GDP, the biggest report of the quarters coming today. This reflects 2/3 of our economy. Excuse me, retail sales reflect 2/3 of the economy and are in the GDP. So what I'm trying to say is that GDP reflects on the retail sale of the economy. And retail sales have been really great. They've been going online, but they've been really, really good. The problem here is, look at the consensus. When things were hunky-dory, pre-COVID-19, we were humming at +2, +2.5. Now we're looking at -33 and 31. What amazes me is that the GDP is down literally over a third, or about a third, and the stock market's making new highs. It's straight out of a book. But with that said, if the number is worse than 33, and I don't see how it could be, but it's worse than 33, we're going to have there's going to be a better argument for more money coming into the market, for more help from the Fed. If the number is, say, 29, 28, 27, 26, we could potentially see a rally in the market. And I know we're setting the goals really low. I mean, why not 40% down? I mean, the number last time was like -20 to -40. But the bottom line is, this is bad. This is bad. And the stock market is not reflecting this. But the economy is in a bad place right now. In terms of employment data, last week, we saw a filing of 1,176 claims. This week, we're looking at, the 4-week average is 1,176 claims. The initial claims last week was 1.16 million. The consensus is 987,000. This number here, 925,000 to 1.1 million, it's better than the 4-week average. Any number, whether it's even 1.15, as long as it's better than the 4-week moving average, we're good. And I think we're going to see that. The bottom line is, any number below 1.176, 1.15 is adequate. We'll take it, but the number is looking bad. I mean, it's not looking good at all. Now, I want to show you guys something. These are my top 10 sectors. And I'm starting to see a lot of, and remember, technology, consumer discretionary, they tend to trade together. For example, Amazon, Apple. Is Apple a consumer discretionary company, or is it a tech company? Well, if I put 50 people here and 50 people here, they're going to argue for a long time. Same thing with Amazon. Is Amazon a consumer discretionary company? Of course it is. Is it a tech company? Of course it is. I mean, they do a lot of server work for commercial. We use their servers. So yes, it's both. So you're going to have a lot of mix between tech and consumer discretionary, which is why they're always together. Whenever you see technology and consumer discretionary apart from each other, that means the market is getting fragmented, and that's another problem. But I'm not going to get into that right now. The bottom line is, I am seeing, and I'll show you why. I mean, I've been talking about this forever, but you could see here the Nasdaq. We are just so overbought. Look at the divergence. Uptrend, stochastic levels. I mean, look at this thing. It's just, look at the RSI level here. We're at 79. We are due for a bounce, so we're probably going to shift lower over the next few days. Also, and this is a big one. This is a big one. Let me show you this very, very quickly. I didn't even have a chance to log in. I just wanted to show you. Look at put to call ratio. Very, very bullish, extremely bullish. And that's telling us the stock market is overbought. Both the NASDAQ and the S&P 500, just way, way overbought. NASDAQ 100 has mostly consumer discretionary, technology, and some healthcare. Healthcare is already taking a backseat, as you could see right here. And this is on a cumulative basis. If you look on a 1-month basis, look how it falls down even further. It's on 8th spot. So healthcare is moving down. So the NASDAQ 100 is being held up by consumer discretionary and technology. And I think we're going to see a little cool off, and I'm seeing more upside in basic material and industrial stocks, and also consumer staples. And again, if you look at a 1-month basis, you will see industrial, consumer staples, basic materials, they're all up there. So I'm going to focus today on basic materials and industrial stocks. I think these stocks are going to have a run. So Lind, this is let me show you the stock, show you what they do. This is a material, basic material stock. They're in the oil field services, but they don't produce energy. It's an industrial gas and engineering company. It's formerly known as Praxair. The company's been doing really well. 5-year revenue, 130%, 5-year dividend growth. They're not bleeding money. 5-year earnings growth, 1-year return, 36%. Most importantly, if you look at earnings per share versus previous quarter, and if you look at earnings growth, it's higher. That is positive. Also, the company's giving out dividends, which is really, really great. And if you look at the stock on a 1-year basis, it is making new highs and it's breaking out of a trading range. So I like this stock. I would buy near the, if it breaks out a little higher, near the 255 level. And I would put a stop loss right at the 239.90 level, right below the swing low here. And if it breaks the swing low, then we may re-enter it, but not going to be too happy about it. The bottom line is I like it on a buy stop right around the 255 level. And if it breaks 240, we don't really want this stock. Or if it breaks 239, we really don't like this stock. Another stock that I'm looking at, and this is in the industrial sector, is UPS. Folks, think about it. Online retail sales are up like 150%. Target up 97% from a quarter ago. All right. Walmart up 197%. How do you think those things are coming to your house? They're being shipped. They're being shipped by UPS and they're being shipped by FedEx, which is my second one. Now, I gave you these stocks a few days ago. So I like FedEx. I like UPS. I like these stocks. They're both breaking out. I would wait on the FedEx and UPS, but I like the other stock right now, actually. The Lint Place, ticker symbol LIN. I like this stock right now for a buy. I would hold for a little pullback on UPS and FedEx, but I think Lint is ready to go. Now, before I let you guys go, I've got something big for you. What if I told you there's a way to know exactly when a stock will explode higher? And that's the opportunity to see your next 300% gain on an investment, and it's just around the corner. How, you might ask? I'm glad you're asking. There's a secret stock calendar that has predicted dozens of gains over the past decade with 100% certainty on the decade. That means before we give you a trade, we make sure that it worked on the exact same day every year for the last decade on a calendar. And folks, pension funds work on a calendar. That's why certain stocks pop at a certain time. There's no mystery or black box to any of this. It doesn't give a rip about news, earnings, the Fed, or what anyone else has to say. The stock simply explodes on the same day every year. It's amazing. It's really amazing. We just saw 10 winners in a row with 1 scratch and 1 loss. When you know the dates, you can bank on big profits. And I mean big profits. Folks, the first trade we took on this service paid for the service, gave us a 25% return on the option. I think ticker symbol was GIS. Don't quote me on that, but it might have been GIS. But again, don't quote me on that. Again, nice, big, juicy profits, low risk, and get this, you know you'll learn about the trade a week in advance. I'm going to give you 10 free tickers with the dates if you attend. Are you ready to land these huge gains? Click on the link below. Take advantage of this info now. It's a secret stock calendar, and it's predicted dozens of gains over the past decades, giving you 100% certainty on the decade. Since we launched this service, we've had 10 winners, 1 loss, and a scratch. And the trades have been just killing it. You've got to check this out. And folks, the most important thing, if you like this video, post below. I'll give you a response. If it's a good question, I'll answer it for you. And give me feedback. Let me know if you like these videos. Let me know if you hate these videos. You can also send me an email at support@marketgeeks.com. I'll talk to you guys soon. Have a great day. And check this out right now. This program is the coolest thing since sliced bread. Bye, guys.